The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this third day of April. My pleasure to be here. A very interesting market. Dow's up 139. When you think of what happened yesterday, up 139, well, the day's young. It really needs to be up 239 to 339 to make a difference. I had a question in the den. Is this a tradable bottom? I think it's starting to become a tradable bottom for quick trades, but it is a very dangerous market still, and I'll go through all that. And of course, tonight I do my webinar. All through the show, I'll be discussing the different aspects that we'll be getting into in greater detail tonight in my webinar. So for subscribers, but you could become a subscriber. In fact, it would be it's a trial run. You could, if you sign up, it's a month guarantee. If you don't like it, get your money back. Most importantly, you'll be able to get the archive. You get the real thing tonight. The webinar, 6 o'clock to 7:30 Eastern Time. The power of the peak D, the fourth highest peak in the Chapman wave, is what I'm going to discuss. And what are we looking for going out, looking out a few months? And one of the things that people who do my webinars, they know that what I do in my webinar is I spend a lot of time discussing what we either in, what we're looking to get in, what we are starting to position ourselves for over a period of time, and the preparation is done at this particular moment. And what's really important about this is that I think it's still early in the whole high-tech area because of those monthly candles. We're going to get into it in a moment. Here, look, the E-mini up 16.50. It had a little bit of a rally this morning. Now it's up at the 25.90 area, but 26.30 is the 9-period exponential moving average. The E-mini so far, it's had real trouble since it broke down back on the last date was above the 9 EMA, and the daily chart was the 16th of March. Since then, it has either just tagged the 9 EMA, that black line. I'm going to be discussing these very important moving averages tonight. It's going to be a tremendous learning experience. This is the time. This is the pretty important focal point for those of you who are interested in building up some kind of a cash position and being able to have money to put to work when we make some kind of we've made the internal low. We haven't yet made the residual low. I'll be talking about that, the earthquake and the aftershock, how we're preparing for it. A bunch of things are going on. So the power of the peak D, we made a peak D top in the daily chart, fourth highest peak in the Chapman wave on the in the E-mini, I'm sorry, on the 29th of January at 2883.25, slumps at 25.32. It has a big arch formation. This H formation, you can see the drawing over there, is so important in my work in this particular phase of the market. And we went to another peak D at 2807.25, went to a leg D yesterday in that sharp decline. That sharp decline didn't take out the 9th of February's low bar. So that says, yep, that's so far a good sign. But it should test that at 25.52, round number low. Got a long way to go, 20 points, 200 Dow points to go on the downside. And yesterday, the Dow did take out the left side low. But look at this H pattern in the weekly chart. Looks quite formidable to me with the MACD very negative, stochastic very negative. Here's the 120-minute chart. Look at all these H patterns here. Peak D, 2679, pulls back sharply. I said to subscribers to my opening call, my daily, very, very intensive and newsful and, technical filled information newsletter. These are the borders right here. I drew it, this little rectangle. And so for the highs, the 26, I think 2606 was the high. And we've got a low so far today of 25.73. Those are your borders that we're going to be looking at much closer tonight and just deciphering what's going on. Now, let's get to this. The Dow, IND. Dow's up 108 at 23,752. See the 9-period exponential moving average, see the lowercase h, see the peak D that was made at the all-time high at 26,616 on the 26th of January, the lowercase h in the weekly chart, temperate peak E, and Chapman wave 5 pulling back sharply. And now that Roman candle, I'll spend some time tonight talking about this Roman candle that I was anticipating we would have a break if there was a close below 24,200 any week after that happened, and we had it 2 weeks ago. I said, now there's a good chance that we're going to go to exactly on or just below the 23,360 low that was made February the 2nd, February 9th. And now there could be a little bit of a counter trend bounce. This is a monthly chart. Look at this. The S&P has the same thing, SPX.X. I'm going to be talking about this Chapman wave Roman candle. Look at that. We have not taken out that low. I suspect we will at some point. That's the low of 2532.69 made in February. In this particular candle, we're already close. Everything's pointing to the fact that we've broken the up channel, this dashed red line. It's about a 48-degree angle to the upside, maybe 50-degree, and we've been under it. The month has just begun, so we can't talk about April as if it's concluded. It is in the process of being formed, this candle. And the QQQ series, QQQ is up 41 cents at 155.91, went to 156.04. The all-time high was 175.21, and I've decided I'm gonna throw this out. I usually find that the way I work best is just to do my stuff, which I've done every single day for 30 or more years than that, making a call on the Dow and everything else. But I just decided that it was important because these are actual trades. This is not speculation. This is not saying I think that the Qs are going to go to whatever it is. These are trades. So I'm throwing this out. If anyone knows of any newsletter that called the exact high to within 1 point of the NASDAQ Index 100, in this case, we're talking about the QQQ. This is called the QQQ Power Shares Trust Series. All-time high is 175.21. We were able to short on this leg D using the Chapman wave methodology less than 1 point from the all-time high. This is not something I like to do. I always have this thing that the elves are waving and wagging their fingers saying, oh yeah, pat yourself on the back, take your hands off the wheel to pat yourself on the back. That's when you hit the tree. No, I think it's very important that we actually state what we've done. If we've spent enough time, we've done the homework, we've done everything. That's what I'm saying. Name me another newsletter in the entire country, in the entire world, that was able to get their subscribers to short less than a point off the all-time high in the QQQ series. Throwing that out, there it is. I normally would never think of doing this, but I think it's really important. These are real trades. Okay, so 155.87 right now, up 36. We've gone to a leg E. It hit the 200-period smooth exponential moving average. It hit the Chapman wave inside wedge. I'll be talking about these techniques tonight in my webinar. And it's trying to bounce, and it's not. The MACD is still very ugly. The Stochastic's flat at 12%. Not a good sign. I think that monthly chart is saying we should be going lower. Thanks for holding on. We'll get to the other things. We'll be right back after these.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. The Dow's up 104. S&P's up $7.90 after being pummeled yesterday. Pummeled. What is wrong? Well, we know what's wrong. What's wrong is we're looking at these monthly charts, and if you see the QQQ sitting on the 9-period exponential moving average, the first time it's been there, Fibonacci expansion, look at this, to the exact right there, 261% expansion level, stops dead at 175.21. The last time we had this kind of pullback was back in 2015, and it went from a peak E and was at 115.47, 115.75. The week, oh, that's right, the very last day of December of 2015, and then it comes back down and it pulls back to 94. So that's not such a big deal. 94, 20 points, and then it turns around after 2 months of consolidating. It turns around and goes higher. We haven't even had 1 month yet of consolidating. Well, from the high that was made, we haven't had 1 month. So I think there's a lot more time to go. And the very best of the best, this is the XLK. Look at this, XLK, made a peak C. Now, in almost all the other indices, I've looked at it very closely, and the comp index and the QQQs I thought were in C, and I missed one, and it was actually a D. But if you look at the select spider, unless I use this as a phantom peak, in fact, there were 2 really close ones. You go to the high of 47.97 in September of 2016, and then you go to 48.06. That is, what is that, 27 cents higher? That could be a phantom peak. I don't like to do this, but almost every single one of the indices has gone to at least a D. This peak C says to me, maybe looking out, is there still going to be higher prices? I think there will be. But I have to, at least on the shorter to intermediate term, have to consider that the peak either was made in the weekly chart, in the daily chart at 71.34, and the peak D in the daily chart at 71.34 back in mid-March, that is a pretty significant, at least weekly pullback, and we're going to probably test the low of the 9th of February, and that would be 60.97. So it's a little way to go. It's about 2 points down. That's what I'm looking at. So what we're going to be talking about tonight, what I'm going to be talking about tonight in my webinar called the power of the Chapman Wave fourth highest peak, peak D, as well as looking at sectors that we have on our watch list for the coming 2 months or so. That's going to be really important. And if you're starting to build up some kind of a cash position, if you're thinking, hey, wait a minute, this market is making me a little nervous, then I'm saying to you, this is a perfect time to be getting into some kind of a rhythm of a methodology that you can use in every single time frame. Look at this, the peak D in the 2-minute chart. Look at that peak D, and then it just sneaks 1 bar higher to an E, and look at the pullback that you've had. There's one arch formation, there's a second arch formation, now we're making a third arch formation, and there's that single leg A to the upside. This is a dangerous market. I'm telling you right now, cash is king. Being out the market in most of your positions, I think is the safest thing. And there will be opportunities. Just say to yourself, you know what? I could miss a real nice bounce. We could rally 1,000 points. Big deal in the Dow. 100 points in the S&P. I still think we're coming down to lower lows. That's the way I'm looking at it, because tonight I outlined for you what we would be looking for in not the internal bottom. We've already had that February the 9th. What I'm looking for in the residual, it's the earthquake and the aftershock. What to me would portend a really strong outlook going forward, looking upward, not down, if certain factors came about. And that's the way I'm looking at it. We remain short. We had a long position potential this morning based on what I thought would be a pop-up, but only if there was a bounce with a pullback to the level that we wanted. It didn't get there in the time frame 20 past 10 Eastern time. I said if it didn't get there, so we're done trying to go along on this particular move, at least for today. And there will be bounces, but I'm looking at certain areas that should be avoidance. Quick question, Goldman Sachs. Well, first of all, Al, congratulations on yesterday at 2 o'clock. You sent me an email last night saying that you covered your shorts and you did go long. I think that was a great move, but I hope it was only part of your position that you kept your shorts. This is my thinking, that you were trading the long side, because nobody believes that this is a serious intermediate term pullback, as far as what I can tell. And everything about what I'm looking at says, just be really careful. Let's just say you miss out on a really big move, but it is the low. Well, you'll have plenty of time to get into some of these fabulous stocks that have had big pullbacks. So don't be in a rush. So Goldman Sachs, there should be Goldman Sachs, because they just got sucked again. This is your trough E. If there's no new low this morning, bounces off a number of times the 200-period moving average. You know, when you've hit the 200-period moving average this number of times, you usually go to the next level, and that would be the smooth moving average, and that's lower down around about the 242 level, and you're at 248 right now, up 99 cents in Goldman Sachs. Other questions I had were, this is the worst start to the second quarter, Q2, April, since 1929. Is 2018 like 1929? You know, I don't believe that we are looking at a 1929 scenario yet. I think there will be a time where I'm saying, okay, I don't know how we're going to get out of this, but this is not good. Everywhere I look, everywhere I go, somebody's talking about the stock market. Geez, I don't even see that. It's just like everybody's stumm. Everybody's not saying a word about the stock market, or they shake their head and say, what's going on? No, I think that we've got an intermediate term sell mode in place in the weekly chart, and I haven't got anything yet on the monthly charts. I think there's time. Maybe now we've done most of the price. Maybe there's another 1,000, 2,000 points down. I don't know, but I'm just saying that I don't think two things. One is that we've made the low, a real tradable low. I'm talking about a tradable low of 6 to 8 weeks. A bounce, yes, but I don't think a tradable low. And number two is I don't think that this is the top. I think that this is a top, not the top. And that tells me that we shouldn't crash to the downside. We should have a pretty meaningful pullback. And some of these stocks, like, for instance, if you go to Amazon, look, Amazon right now, what is it doing? Down 1 at 1371. in leg C to the downside, having made a peak D. Tonight's webinar, talking about the Ds, I'm going to show you how many peak Ds. I mean, I could go on and on. I'm just going to select very key stocks to do that. It's very important. I've got this as a G in the weekly chart for Amazon and an E in the monthly chart. That says, you know what? MACD is still good, stochastic is still good in the monthly, not so much in the weekly chart. The weekly chart suggests that this candle low of the 9th of February at 1265, that's just 100 points down, 110. I think it's going to be tested, and maybe sooner rather than later. And I'm just going to make a big deal about that. Tonight I'm going to be talking about it. Tonight is education, speculation, and technicals. It's really important that I give you my technical thinking, not just an imaginative, yes, we're going up to this point, no, we're going down to, I want to give you facts. I do that.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, so let's just go through gold. Gold is right now trading at 1336 minus 10. One of the reasons why we were long, we got stopped out of a break-even trade, the gold last week, is because this particular rally right here looked as if it had the chance, with the technical starting to improve, to try to test the left side high of January the 25th at 1376.40. It failed, and I suspect that now, when it comes to calls, for instance, I spoke about the Japanization of bond yields, at least for 20, it's probably even more years. Talking about timing. Japanization of our bond yields meant that yields would go down to 0% when nobody was even thinking about that. And I stuck with it for years. And now I'm saying I think there's starting to be a slight change of trend. We've only broken the trend line of the TNX to the upside and the monthly chart, but we haven't really significantly gone to big recovery highs. So that's a long-term call. Gold, I've been saying for a year now, I think it's a sideways trading band, and it's stuck. And at some point, gold is going to be very important because it'll become a safety factor. And I don't see it just yet. I think it's going to happen, but I don't see it just yet. If you look at the dollar's stuck in a range. It seems to me that there is influence either to be keeping the dollar stable, not let it break down, but I think also to keep it not going too high at this particular point. So it's at 90.19, made a little bit of a gray leg B at this particular point. It always looks like it's about to break to the upside, and then it just fails. So the dollar's going to be key, and I've been saying a dollar in the 91.20s area, closing in that area, maybe 2 or 3 times during one particular week or a week's time over a period of, say, 5 to 6 trading days, that to me would say, aha, now the dollar is being pushed to the upside, or maybe not pushed by its own volition. It is actually moving to the upside. If you look at the EUR-USD, the euro-dollar currency pair, breaking down, making that arch formation. But no, sorry, I shouldn't say breaking down. I should say it is moving down. It is still within the range. And I did this big circle, this oval pattern to show that this is very important, because if the euro ever takes out this low of 1.215, made the week of the 2nd of March, that's very negative. If it takes out the high that was made last week of 1.247, I was going to say, great, now the euro finally could go to that leg D in the weekly chart. So far, it's holding its own. It's just in a trading band, narrow trading band. If you look at the USD JPY, that is the yen, dollar-yen currency pair, this is coming off the bottom. So far, it's okay. The huge move in the MACD and stochastic, not such a big move in the price. So this is just saying it's using up a lot of valuable energy, and it hasn't really broken out. It needs to get to the 108.30s, and then I'm going to say, aha, the yen is finally breaking to the upside. If it breaks below 105, it's just stuck in this terrible trading range. Copper. Let's go to copper. I haven't looked at it today. It's up a fraction. Yeah, it's just also sort of stuck in a range, more towards the lower range than the upper range. It just says be careful, because if the dollar goes to 2.90 in the next 2 weeks, not good at all. If it goes to 3.15, that's going to say, hey, very nice. Trading bands still unfolding. Now we can go to the TLT. The TLT at this particular point, pulling back a little bit down 70 cents at 121.18. And that says that rates are stuck in a range. If I can get to it right now, I just want to show you something very interesting. As we're doing that, what I want you to say is 123.09 is the 200-period daily exponential moving average resistance for the TLT, which is the Lehman 20-year T-bond fund. And if you're looking at the long-term yields, the 30-year is the white, the TYX right here. It's rallying. The TNX, the 10-year brown, is rallying a little bit. The 5-year is rallying a little bit. But this is just to say it has made some kind of a peak. It is in a high-level consolidation. And until we see new highs in the 30-year above 32.21, the 10-year above 29.43, and the 5-year above 27.34, trading band, high-level consolidation in the yields. So now I want you to also show you something very interesting. This is what I'll mention tonight. HGX, it's really important that the HGX, which is the Philadelphia Housing Sector Index, trading up 49 cents at 311, making the lowercase h, goes to a lowercase m, takes out the left side low in a leg E to the downside. This is telling us that the home builders, and if you look at Toll Brothers, nice example, making lower lows, this is not a good sign at this particular point, and it's saying something is not quite right in the economy. Some of the sectors like Home Depot, look at this is the springtime, it should be soaring. It is down 2 cents at 172.88, having made what? a peak D daily high, 207.60 on the 29th. I'll be talking about these. I better just put this one down because I don't know if I wrote it down. No, I didn't. So let me just get my pen right here, my notebook, and I'll put HD in the whole slew of stocks that we're going to be looking at tonight as examples of peak Ds. Okay, now where are we in terms of crude oil? This whole thing with crude oil, it has pops and then it breaks down. Made the peak D. Oh man, just yet another D in the daily chart in the arch formation. There's the Chapman wave inside wedge. It bumps into the resistance, goes to the D. This is very interesting because the all-time high was 66.55. What did it do back in late March? It went to what? 66.55, an exact double top. There's this V-shaped pattern, which is also the cup formation, and it says in this rule of thumb, if there is a break 1/3 to 1/2 below the left side cup lip, that is this one on the left here, that's weekly chart, the week of 26th of January, be careful because that 50% level is going to be really important, which will be at about 62.30. Crude oil right now is at 63.36, up 34 cents. And if it takes that out, invariably it goes down towards or even to the left side low bar, the trough. 57.96 would be the target if it broke down. If crude oil breaks 62 support, it's a real quick run to the 59s. Whew. Okay, got those out of the way. Another question about, ORH, I haven't looked at that for a little bit. The ORH breaking down, left side, there's a, let me just draw this in. There's your H, goes to a lowercase m pattern. Invariably, the second arch goes a little higher than the left side arch. It did, in this case, just a tad. Went to a peak D, pulls back, but has has failed at the left side low, which is the ORH is the, is this the Van Eck Vectors Oil Service? Yes, the Van Eck Vectors Oil Service, the low of 23.84 on the 9th of February, 23.84. Yesterday's low was 23.86. So he took it out. The rule of thumb in the Chapman wave arch formation is that if it takes the left side low out, it has with 2 bars max to close above it. It's done that now twice. Well, we've done it about today. So far, it looks like it's doing it twice. And that says there could be a rally to the left side peak of significance, and that would be the high of 24.58 of the 27th. So watch this closely because a breakdown below the left side low again would be very negative. Basil Chapman, Tiger Conditions Hour, Dow's up a whopping 99% or 99 points. S&P's up 6. Right.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, Basil Chapman, Tiger at Christmas hour, 1,145 left. So let me just go through this again with a bunch of questions. Let me just try to answer something. It's always very difficult for me to talk about some of the techniques that we've used when it sounds like braggadocio. I just, from my own experience, when you take your hands off the wheel to pat yourself on the back, my expression is, that's when you hit the tree. But how else are you able to explain to newcomers, to people listening who say, I don't know. I don't know if I should really, do I need to get a newsletter? I'm saying that the information that I'm going to give tonight is based on what we've been doing. I was saying just doing. We went short the Dow. Well, first of all, look, here's Baba. The question was, what about Baba? Alibaba trading at 175.91, down $1.70. And it goes from a peak E top in February in the 205 area, drops down to the 169s, bounces up to 203, and now it's trading at 175 peak D, peak E, and that makes a peak D, 4th highest peak. This is a right arm extension in the weekly chart to a peak E, and it's a peak D in the monthly chart. When I go through these charts, let me tell you, I'm kind of nervous. I've never seen so many Ds and Es in monthly charts. I shouldn't say never. In ages, I haven't seen them. In monthly charts, I'm talking about in this major move from the 6th of March low of 2009. This is really unusual. So let me go through this very carefully. What I am looking at here is in the Dow INDU, the top was made at a peak D. For subscribers, we went short just a little after that. It gapped down, and then we went short, and we held the short, and we've taken out for a nice profit on the way down. Then the day of the low, the 9th of February, we started a short position. We lost, I think, less than 1%, I think 0.8%. The very next day, we got on board, and we ran it up for a while, took the profits, didn't go back, and now we are short again at 25,400, just over 25,400. The high that was made was a peak D in the S&P, but a peak C minus in the Dow daily, and that was on the 12th, and the high was 25,449. So almost at the high. We are remaining short for now, and that's the way it is. We've taken nice profits, just a little bit of money off. And we're also, as I say, short the Qs from less than a point off the all-time high. I'm talking about this only because it was based on the webinar I'm going to give tonight, which gives you that peak D. The SMHs, I said the very day of the high, I wouldn't want to short, but we've done it before, done it not well before with very small losses, and they added up and we had a really good when the big decline occurred back at the peak D high at 108.56 back in 23rd, just around that area, the 23rd of January, we did go short. We did do very well on the way down. Then we didn't play the upside, but we did. I wanted to short, and we did short soon after the top, but we got a break-even trade, and for some reason I just couldn't get back in. It's very unfortunate because when you are able to short within the very low, or just within a very tiny percentage of the low or the high, it just gives you the cushion. That's the reason why timing is so important. You try, at least I try to time, because that allows you the comfort of saying, phew, thank goodness I'll give up profits, but I want to be in the right position if I think that I've got the trend correct. And that's what I'm going to talk about. The trend is your friend, and you want to be able to look at it. And what I've been saying to subscribers and to others who have asked me the question, the weekly charts are saying to me that the daily charts aren't really what you should be looking at now, because the larger tide of the weekly charts has changed. And when you look at the larger tide, it's the little rip tides that you don't see. Me being a lousy swimmer, used to not be a bad surfer, body surfer, but a lousy swimmer. I know tides very well. I couldn't tell you how many times I've almost drowned, but I'm looking at the tide of the SMHs having turned, with a chance that we might even now have that peak D in the monthly chart as something a little more significant to make the low that was made in February right here at 93.88, both a target and perhaps a very meaningful moment, because that means you go under 98, which is the 9-period exponential moving average in the weekly chart, monthly chart, I'm sorry, which has not been pierced to the downside since it broke upside back on, was that November? That was March of 2016. In fact, February was the only time since then that the 9 EMA was even next to the downside. I think it's going to be taken out. That's my thinking. Okay. So, and then I had a really good question, and the question that comes up periodically, do I not use volume? And the answer is no, I don't use volume purely as volume. I don't look at it every day. I look at on-balance volume. That blue line is on-balance volume. And look how important it is. Look, this on-balance volume went in the SMHs. It went peak A, B, C, peak D. Corresponds to the peak D. That was a confirmation for me that this could, in fact, turn out to be a lot more serious. On the way down, it's trough A, B, C, D. This is trough E. This is where you'd expect some kind of a bounce, but not with a flat stochastic at 10.63. Yes, it's oversold. But you remember when the E-mini, let me see if I can do that with the, yeah, look at the semiconductors. Remember that long period that I kept saying, oh, the semiconductors have just been absolutely amazing. Look at this period right here, where the semis were above 90%, above the 80% line in the 90% and higher area, all the way from October into mid-December. And then it broke down as the stochastic broke down, yet the price went up to that peak D. I love to look at those divergences. So yes, these are techniques I'm talking to you about now because we'll discuss them tonight, and they're very important in my work. So the XLK, yeah, I just did that. XLK, at least for now, peak E on the den, I'm calling it peak C, but there's really every chance. Once, once out of hundreds of charts, will I make an exception for the, if you're going to form fit your technique, you're always going to be right and then always going to be wrong. You have to have a technique. You have to have a discipline. My discipline is we've got to get to a D before we get a major sell-off. Well, we went to peak C1, C2 in the XLK monthly. Then it pulled back very sharply. That was back in 2015. Pulls back to the low that was made at 31.32 in August of 2015 from the 45s. And then it runs up and it goes peak A, B. And what I was saying is, for now, I'm going to put this in brackets, a phantom peak C back in September and October of 2016 with a 27-cent difference of the highs. That's what I'm saying. and that says this should be a D. Everything about it is suggesting that if there's a break below the 9 EMA, that's more like a D than a C. And that's all I'm saying. Once in a while, I have to go with my alternative rule, and that's to use the phantom peak. So, all right, we've got a Dow up 125, S&P's up about 8. I'll be right back for the final segment. I'm going to talk about my webinar tonight and my challenge. Anyone out there know of a newsletter that got within 1 point of the Q's all-time high?
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So I had this email last night. Bravo so far, it said, this is from Al. Bought today QQQ SPY diamonds at 1400 hours just in case. Bottom was in today and spread orders in for SPY. And he gives the numbers, greatest double bottom. And he sent me something a few minutes ago. Yes, bravo on your QQQ short call. Your system kicks butt. You know, it's not... I've learned that if you take your focus off to think about how great anything is, rather than the process, I find it very distracting. So this is something I've never done. I'm doing it now, for there are actual specific reasons why I'm doing this. I'm throwing it out to say, let me know if you know of any newsletter writer in the world who calls the QQQ based on a technique. I don't want someone to just say, whoops, I'm going short, on a particular technique within 1 point of the all-time high of the Qs. That's all. And I'll probably live to regret this because I've never done it before. I find it really important because these are actual trades. This is not words. And that's what I'm emphasizing. So let's get to the next question was GT says transportation index. Well, this is going to be very important. You see the IYT, which is the, right here, the iShares transportation ETF, made the arch formation, held the 200 period exponential moving average. The technicals are okay. They're trying to rally. They're basically weak, but they're okay in the sense that they're trying to rally. But it's the weekly chart. The weekly MACD is still very poor. The stochastic is still expanding. It's still not good. On-balance volume is very weak. And the monthly chart, stochastic is at 68%, not above 80, but the MACD is still good. And that's the reason why it's holding above the 9-period moving average at 185.47 up 2.16. Sounds great, but it's really just in a little tiny trading band. I want to see, I'll start changing my mind if the IYT in 3 weeks' time or 2 weeks' time is actually trading in the 202s instead of lower down. So my webinar tonight, very specifically, is going to be saying what were we looking for, what were the techniques that work, what are we going to be looking for not the internal low, but the residual low. What do you want? What stocks, sectors, what would you look for? I believe this should be one of the most important webinars I've given in a long time. Come tonight.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.